Good morning. Welcome to CurrencyChange Daily Markets Update on Friday, the 25th of October 2013. My name is Laurent Guilbaud, Managing Director at CurrencyChange.com, your local solution to send your money abroad. In the US, the dollar slid to a two-year low since yesterday versus the euro, before reports today forecast to show diverging confidence in the US. The greenback, as they called it, headed for its second weekly lows against the euro on bets the Federal Reserve, due to meet next week, will maintain its pace of bond purchases, as we've been saying for 4 weeks. The partial US government shutdown that began October the 1st amid political deadlock over spending and the debt ceiling probably trimmed 0.25% growth in the fourth quarter in the US, and cost was around 120,000 jobs in October, according to declaration from the US President yesterday in front of his economic advisors. In US, data out this afternoon could provide reasons to reinitiate for speculators some US dollar short positions. While decent headline durable goods are expected in the US, we see downside risk which could happen on the final release of the University of Michigan survey. The initial print saw a decline in the index, but given the survey was taken just over a week into the shutdown, it is unlikely to reflect the full impact yet of the government shutdown, and we should see some volatility in the next coming weeks. In Europe, European Union leaders recommitted to seek a joint strategy this year for how to handle failing banks in order to prepare the Eurozone for European Central Bank financial oversight. The leaders last year sought to break the link between struggling banks and the Eurozone's sovereign debt crisis by handling the ECB supervisory power, the first step toward a broader banking union. The European Commission, followed up by proposing a single resolution mechanism for failing lenders. I strongly advise you to read a very good article on that in The Economist of the situation on each country. Euro continued to outperform despite the slightly disappointing flash Eurozone PMI. Yesterday, we have German IFO survey out this morning, which is a bit slightly higher, but didn't move the market in terms of reaction. The euro-dollar 2-year swap spread moved in favor of the euro since yesterday, which supported slightly the euro upside, but there is little scope for euro yields to move higher from there. In the UK, sterling was lit and changed yesterday against the euro after the Bank of England Governor Mark Carney declared that the central bank will widen access to money market operation and lower the cost of liquidity insurance. The UK GDP expected this morning around 0.8% should be in line, compared with 0.7% in the previous 3 months. The Bank of England will expand the range of collateral it accepts in its facilities and offer money for longer periods on cheaper terms, Carney said in a speech in London late yesterday. Officials will also consider making some liquidity tools in the UK available to a wide array of institutions to help. Euro sterling has been hedging higher over the past few sessions, breaking above a key level, which is a 200-day moving average. However, this is arguably due to euro outperformance rather than a strong sterling, because sterling has made a lot of gains recently against the high yielders. The main focus then for this morning is to analyze in detail UK Q3 GDP, expected at 0.8%. In Asia, we had the New Zealand dollar, which weakened since the last 2 days against all its major peers after the nation's central banks signal hesitation to raise borrowing costs. I remind you, this is the highest interest rate at the moment in G10 currencies. In terms of live exchange rate, we have on sterling dollar 162.30, we're higher than yesterday. Sterling euro 117.54, slightly higher. Sterling Australian dollar 169.23. Sterling New Zealand dollar 195.38. The economic agenda, key statistic for today, UK time 9:30, the GDP release expected at 0.8%, 1:30 UK time, US dollar durable good order expected at 2%, 3 o'clock, the Michigan Consumer Sentiment Index expected at 75. If you require further information, please visit now, CurrencyChange.com, or contact us on +44 027373 2686. If I don't speak to you before the weekend, have a great weekend.